Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, this week has all been about the situation in US politics and Joe Biden's inauguration, and markets are obviously optimistic. So just to take a quick recap as to where we are right now, the FTSE 100 is still around where it was last week, 6,750. The S&P 500 is up slightly at 3,850. That means up about 1% on the week. It did have a shortened trading week actually because of Martin Luther King Day earlier on this week. In Europe, the German DAX is still around 14,000. So the market is digesting what's going on in US politics, but it has been overall positive for sentiment. And that's obviously because after last week's episode, you will recall I talked about Joe Biden releasing details of his spending plan, which of course he did. That's totaling about $1.9 trillion in size. So that has been positive for investor sentiment and particularly for equity markets around the world. Indeed, if you look at the MSCI Broad Index of developed and developing market stocks, those are hitting all-time highs, and that's again is off the back of what's going on in US politics and the enthusiasm that equity investors have. And if you look at emerging markets, so far in 2021, they're broadly up around about 88%, I should say, which is not dissimilar to what we saw in November and December. So you may recall I mentioned about having a new emerging market part to my portfolio exposure, which I did at the start of December, and that's proved very profitable. So emerging markets is going to be a theme you're going to hear over and over again, I think, in 2021, and that's largely because of the falling dollar. So the dollar is still weakening because of this stimulus package that's been announced. So it's seen to be net negative for the strength of the US dollar. In fact, it isn't just in emerging markets. We've seen the markets rally. As I say, the S&P 500 pushed up just slightly, but that was to a new all-time high. And we also saw a new all-time high on the NASDAQ. And on Wednesday, after the inauguration, the S&P 500 rallied, and it was the biggest rally or rise on the day that we'd seen since 1985, when Ronald Reagan was sworn into office. So it's been very positive. Now, if you look at the currency markets, the pound has been strengthening even further. Now, last week I said it was around about the $1.37 level. It did pull back a bit, but has since rallied, and we are still looking to see whether it can make that $1.40 level. And the reason it's rallied is largely because the dollar has fallen. It's off the back of this idea that Joe Biden is going to push ahead with all this stimulus, and possibly the Fed may even continue with the stimulus going forward. So that is seen as negative for the US dollar, which obviously on the flip side is positive for the pound dollar exchange rate. We're seeing the 10-year US Treasury yield around about 1.1 still, and we're seeing it sort of push up higher. We might see if it gets up towards that 1.19 level we saw earlier in the month. The 10-year UK gilt yield has equally been pushing up and testing highs we've seen recently in 2021. It's up around about 0.33 as we make this video. So a lot of that is down to the inflation expectations that are out there. And we have seen some inflation in the recent numbers released in the UK. But looking further forward, if the economies around the world, and particularly in the US, start to grow and expand as a result of this stimulus that we've just spoken about, but also as a result of the COVID pandemic being taken under control, then we are likely to see extra growth, economic growth, and that is therefore positive for usually equities, but not for bonds. And the other thing, we see a lot of people talk about whether the market's getting away from itself, whether the euphoria is overdone. And now one thing I do want to touch upon is last week I mentioned 4 stocks in particular. I mentioned Apple, Google, Microsoft, and Amazon. I was talking about breadth in the market, and that's where we look at the number of stocks that are making new highs versus those making new lows. And I mentioned that basically some of these large cap tech stocks haven't really gone anywhere for the last 3 or 4 months. And we might actually get to the point where these stocks start to catch up with the rally we've seen at the back end of 2020 and start to help the market push higher once again. Because don't forget, they were the leaders in 2020 after the pandemic came along. So will they this year? They've been the laggards really for much of 2021 and the back quarter of 2020. Will they now start to bring up the rear and help the market find another leg higher? It could possibly happen. And I mentioned last week about this. And interestingly, if you look at where those stock prices have gone, Apple is up 2% in this last week. Google is up 7.5%. Microsoft is up 4.5%. And Amazon is up 4.3%. So way ahead of what the wider market is doing. So it looks like what I mentioned could happen and what to look out for may be unfolding, which is helping to drive the market to these new all-time highs. So we are seeing more increasing breadth in equity markets, particularly over in America. So it's an interesting period. The market is digesting what's happening with US politics. They're trying to second guess what's going on and what might happen in the early days of Joe Biden's presidency. And if you listen to the weekend podcast, the Sunday podcast, then I will touch upon the first 100 days in office for Joe Biden and what that could mean for equity markets if we look at what's happened in past first 100-day periods following a new US president. So keep an ear out for that. But where we are right now, to summarize, is that markets are still near all-time highs. They're holding up well. We're seeing increasing breadth. The euphoria isn't going anywhere, but it's still not at the extreme levels that we saw a year ago. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me, Damien at moneytothemasses.com is the email address. Twitter, moneytothemasses with the number 2. Of course, we're on Instagram and you can find us on Facebook. And don't forget to subscribe to our YouTube channel.